Hey, hello everyone, welcome to today's video. It is the 1st of December, so we have a new month in the market. Things are looking fairly interesting. We had a very good week last week, a pretty decent recovery. It was, I must say, on quite a low volume, being a holiday week here in the US. So, the question is, how much do we trust this rally? Is this at the beginning of another uptrending move higher, or we're about to reverse and revisit the lows? And we are basically getting, or we haven't gotten very close. We have gotten very close to the prior swing high near 6,900. And I'm going to talk about the yellow wave here in a second. This is where usually you have reversals when you have corrections. Now, if you look in here, this is the S&P 500, the futures, and if you look at the volume for the recovery, it was fairly low. It was below average. One of the kind of the largest volume days where it was after this massive sell-off we've had whenever this was on around November 20th. But then the volume started to diminish as we were moving higher. And today, with the market kind of coming back with the beginning of the month, we got a pretty good volume and we were able to rally. So I'm definitely a bit cautious here uh, because we are very close to these prior swing highs, and we've rallied on low volume. So for me, it's important that we overtake this level, and we're doing so with conviction. The fact that we are above the 20-day and above the 50-day, these are important factors, and I think have to be considered. So from that point of view, it's a good thing. I just don't trust it a lot because of the lack of volume and because the proximity of this B wave. So it is a point in time where I would like to wait, and short bullish positions could be initiated here ahead of the breakout. But one has to be careful because on a daily close below the 50-day moving average, I would definitely start to run for the hills. So this is happening kind of across the markets in the S&P. It's happening in the Nasdaq. It's happening in the Dow as well, although this has a little bit of a weirder structure. It happened in the Russell, which kind of has overtaken this high. Now it's kind of coming back below it. So we have a little bit of a mixed signal here as we're beginning December. I know we're going to have a Fed meeting. We're going to have some economic data. The markets are just not acting all that strong from what I'm seeing across. We had a pretty decent recovery in the number of stocks above their 20-day, above their 50, above their 200-day. So we had a recovery on low volume, I have to mention. So we had an improvement in breadth, but we continue to have a pretty high number of declines as well. So also, we do have problems still in the crypto market where Bitcoin, Ethereum, a lot of the coins continue to struggle. They seem to be wanting to revisit the lows. We'll take a look at the wave count, but look how nicely, as you begin the downtrend, the 20-day moving average offers resistance on any rally. And this is in line with the fourth wave idea that I presented, I think last week or the week before, where we were talking about 1, 2, 1, 2, 3, 4, 5, 4, and 5. So further weakness, although at a lower pace, if you remember the videos. So anyway, it is possible that this, was an initial rally off the lows, and this is a wave two. For that to be proven, you would have to get back and break above 93 and continue to fight a bit more and get back above the 50 days. So I think it's way too premature to assume that a low is in place in Bitcoin. In my view, so it is fighting to find it, and the more it holds, without making a new low, the better it is, and the further strength we're getting from any pullback, right? Because we wanted to stop making lower lows and lower highs. You want to kind of to start making higher highs and higher lows to turn back the trend. So, let's say that Bitcoin, it's not really responding to kind of what's happening in the equities, and there's a little bit of a divergence there. But so I'm gonna kind of start to take it slow. I do have long positions in the market, and I do have quite a bit of hedges that I reinitiated, most of them as we were finishing off last week a little bit on that strength, and even today as we were struggling to break above that B wave high in the S&P, and because the puts are cheap here, I'm trying to build a little bit more, let's say, protection for the downside and hedge a little bit my long positions. In case this fails and we're starting to turn, we have a slight signal, but not enough just yet. So I will unwind those, and I would start to stay more focused towards the bullish side the moment we break decisively above this B wave and we continue to go higher. Now, in terms of the wave counts, and we're looking at this as a wave 4 with the move higher in a wave 5 of a larger wave 1, with the alternate that wave 1 was already completed here, and we're beginning a larger correction where this here becomes a next wave. And I put this on Twitter today, where this move, it is a usually, it could become a failed rally. We call that an X wave as it turns into a complex correction. So you're beginning as a regular ABC, as a regular zigzag, then you're adding an X wave, which connects the next zigzag, which would be an ABC for a wave Y. So all this does, X wave, it's a connector between two corrective forms. They don't necessarily have to be zigzags. You could have this, and this is a talk about, just a short, quick parenthesis about complex corrections, right? This would be called a double zigzag, where you have a first zigzag, an X, and another Y. But then you can also have, complex move where, for example, you could have a flat, an X wave, and then another flat, or another zigzag, or maybe a triangle. So there are ways that complex corrections could unfold. You could have a WXY, XZ. So anyway, a lot of that can happen, and sometimes it does happen, sometimes it doesn't. But if it does, this is how it usually starts, with a failed rally near the prior B wave high. So that's why I'm watching this very carefully. If this gets taken out and we move higher, it's very likely that we'll make a new high above the origin of the wave A, and this becomes part of a next sequence higher, which could be wave 1 of a wave 5, could be a wave 5 in entirety. There's ways to kind of look into that once that happens, but at least then we know that we're out of this corrective pattern and we're looking for something different. And the closest count that I could come up with for this stage and for a short correction here would be that the next move higher would be, again, a wave 5 of a wave 1, or just wave 1 of this wave 5, where this goes up in a 1, you pull back in a 2, 3, 4, and 5, and you create maybe an ending diagonal or just a regular impulse. But once again, in terms of a trading perspective, this is where the decisions will be made in the S&P and across the risk markets in here. So let's pay attention to this and see how that unfolds. And then if we take a look at Bitcoin, I have two counts. One of them, I'm looking at this as a wave 4 that sells off in the prior wave 4 area, which we've gotten very close to right there. And if this is complete, you can look a little bit at time pass, and it's fine. I would say. I mean, we can even do, just for the heck of the exercise. I know a lot of people are kind of fascinated by time, myself included, and you can do quickly at the time analysis of wave 4 versus wave 2, and I do that right here for V2, and you can see we have basically traveled, not yet, we've traveled about 61.8% distance traveled in wave 2 if we're measuring wave 3 from this point, and we're thinking of this as some kind of a flat in a wave 4, and we're getting close to about 100%. So we're within the, let's say, the proper range of a timeline between wave 2 and wave 4. Wave force could extend, you can get into the 161.82, so there's room for this to grow and continue. This is not an exact science, right? It's all a bit relative, and we don't dictate exactly kind of to the point how markets move. But if this is a fourth wave and it's near completion or completed, we would be looking at this as being wave 1 of this lows of a completed pattern. This is a wave 2 into some kind of a 78.6 pullback, and now we want to make a new high and continue to go. But look, we're still below the 20, so I would continue to favor the downtrend at least until we're getting back above some of these averages. So in my view, some cowboys, some guys that are want to catch the low a little bit faster, that's something that could be done with very tight controls. For me, I would like to see a lot more confirmation here before I would jump in any long positions in Bitcoin. And then the other wave count, it is where we're continuing to look at this as maybe possible larger wave 1 top, and we're looking at the wave A of a larger wave 2 with the wave A decline in progress, followed by a B wave eventually, and then another wave C decline. And we are basically in a wave 4, which pushed about 50% of this latest decline in a wave 3, which we talked about here as he was approaching. Now, you could have a wave 3 that takes the low of this third wave. It could be a truncated fifth also. Then you start to kind of move sideways again in a fourth wave. You're not really getting much above 93. That it's a ceiling. And then you start to turn, and then you form maybe some kind of a triangle, or have you a little bit of a corrective structure, and then you fall one more time into wave 5 of A, and then you go back up a certain percentage before you fall again into this let's say wave C of a larger wave 2. So that's kind of where we are. That's why I'm not let's say that excited about having necessarily a low, or even if it is, I'm not going out there and just throwing everything at it. I want to watch the price action, because this will take a little bit of time, and I want to look at that in juncture with what's happening in the equity markets. With the Fed coming up here with a possible rate cut, we'll see kind of how that pans out. So I'm watching the futures market up here, and I look at kind of how we're opening in here. They had a chance to rally this, but they kind of failed, and we're kind of pushing back. So the moment we get back below the 50-day moving average, if we do, it's going to create a larger avalanche of selling, I think, and then that's going to be more of a confirmation that the X wave here has fallen, or is being confirmed, and and you're looking at further corrective price action. So that's about it, guys. Thank you for watching. As always, you can find me on Twitter and on Discord, also on Substack, and up here on YouTube. Thanks for watching. Bye bye.